everyone, and welcome back to Let's Talk Crypto. I'm your host, Brittany, and if you're interested in all things crypto, finance, and tech, then this is the place for you. And today I'm joined by Mo from Cointracking. Cointracking is an online crypto tax service. This is so that you can securely and accurately calculate your gains and losses throughout the year. We felt that it was a really good idea to get someone on the pod who knows their stuff about crypto taxes. And also, they are our sponsor on today's podcast, so make sure to go check them out through our website where you'll get exclusive links and discounts. Now, let's get on with the show.
Hey, Brittany, thanks for having me. Of course, Cointracking is a typical crypto tax tool where you can track your transactions, your tax filing with one click. Basically, we just track the transactions from your exchanges and wallets and then automatically create your tax report.
Oh, fantastic. Okay, that's great because I know doing taxes, no one likes doing it. So having an automated system is always super helpful to make sure that you don't make any mistakes. But just, I'm baffled by this kind of technology. How do you know how it works? Like, could you explain to us sort of how the algorithm calculates what needs to be taxed and what doesn't? And
I'm not a developer, so I don't know the technical specifics, but basically we have API keys and CSV exports from the exchanges or wallets. And we have the blockchain export as well. We collect all the data. We have the thing we call transaction types. We map all the transactions happened, like mining, staking, airdrops, trades on spot or future trades or something like that. And we map them in the program. And every transaction, fits to a taxable event or something like that.
Oh, fab. Okay.
It's concluded in the tax report, yeah.
Okay, that's because I have no idea, and I kind of handed my taxes like, I really hope this is right, because I don't know what I'm doing. So things like this make it so much easier and simpler, especially when it comes to crypto. And I think one of the things people may be a little concerned about is having multiple wallets, because I know in crypto it's a good idea just to have a couple wallets here and there so that you're not putting all your eggs in one basket, as we know from the recent FTX crash, which was a bit tragic. Does that match if you have multiple wallets? Can you download them into the system, or do you have to transfer everything to one wallet? How does that work?
Basically, from my experience, you can track your wallets by hand, by your own, if you have 5 or 10 wallets or exchanges. But after that, it's becoming exhausting, and tools like Cointracking or the other tools as well are a very good helper in that case. You can have infinite wallets, infinite exchanges, and everything will be tracked properly.
Oh, fantastic. That's good, because I know, as you said, it's absolutely impossible to keep track of how many wallets that you have sometimes. And sometimes you have a pleasant surprise or a very not pleasant surprise if you've kind of left one for a little bit. Is there a cap on the amount of transactions you can analyze? I know that you guys have different payment programs. Is there like an infinite amount of transactions you can look at, or is there it's capped out?
Yeah, basically we have an infinite amount, but Cointracking, is you have to pay Cointracking by transaction volume. So a certain amount is free, but then we have a few steps depending on how many transactions you have. But it's in the thousands. So yeah. But if you have the unlimited package, you have infinite transactions.
Okay, so you don't have to worry if you're hardcore degenning back in 2020, I think it was, when the sort of NFT boom popped off. And speaking of NFTs, I know a lot of people have no clue when it comes to taxes around NFTs.
Yeah.
Does your platform cater to working that out and working out if you need to be taxed on an NFT that you've made profit on or not?
Maybe we take a step back to the tax system in the UK. Basically we have two different types of tax rate. We have your regular income tax rate, and we have the capital gain tax. As a rule of thumb, everything you earn is in your income tax rate, which is the personal tax rate, and everything you trade is in the capital gain tax, depending on the amount, it's 10%, 20%, or 40% in the UK. And with NFTs, there's basically the same rule. If you trade NFTs, you're in the capital gains. If you get an NFT airdropped or something like that, then it depends. But if you did mostly nothing or earned it in some way, then you're more in the income tax area. If you open the NFT center at Cointracking, you can see every coin which is tracked in your wallets or exchanges or anything like that. And then you can, select the NFTs and label them as NFTs. And once you have done that, the tax report will treat as NFTs or under the tax rule for NFTs. But basically, it's the same like every other coin. Yeah.
Okay, I think that's a big relief for a lot of people because a lot of people have no idea. I know that there's a running joke that crypto and NFTs is an industry where you can avoid tax. And I keep seeing that on Twitter and I'm like, guys, you need to stop outing yourselves. Like, this is all just terrible, kind of airing your dirty laundry. So it's nice to know. I think part of the worry was that it was too complicated. People didn't understand how to do it. And now that there are tools to do it, it makes it a lot simpler. So I think hopefully maybe the tweets will die down if people start hearing that there is solutions to this problem. But I think one of the main things is people don't actually know when tax is deducted, because I've heard various things. It's when you make a sale or it's when you withdraw it into your bank account. When does crypto become taxable, as it were?
So as mentioned, we have different transaction types or different types to, earn gains in crypto. If we are in the trading section, you trade on spot or you trade on futures. Every time you exchange something, it's a taxable event. So if you trade fiat to crypto, okay, that's your first buy, your entry. But if you trade crypto to crypto or crypto to fiat, or if you buy a future with crypto, then it's a taxable event, and you have to tax the difference between the sales price and the acquisition price. And you can deduct the transaction fees, but that's basically your taxable value. Yeah. So it's every time.
Okay. So even if you make a loss, so say if you buy ETH at, let's just say £100 and then you sell it for like £50, that doesn't count as that's a loss, isn't it? Oh.
Yeah. It's also a taxable event, and the loss can be deducted from your other gains. Yeah.
Okay, that's an interesting fact to know about, because I know a lot of people are questioning gas fees. Does that count as a deductible sort of expense, or is that all catered into a sale?
Yeah, gas fees or every other transaction costs are deductible, basically. Yeah.
Okay, that's nice to know, because I know a lot of people are like, oh, the gas fees are too high, which, oh my goodness, back in sort of early 2021, they were extortionate. So I think a lot of people will be pleased to know about that. Speaking of sort of tax deductions and getting into like the nitty gritty of taxes, I know it can vary on where you live. So if you say live in Dubai, I know that there is I think my tax knowledge is, you're probably thinking, my goodness, this girl knows nothing. But with Dubai, you don't pay taxes, but like Italy, they've just announced that you've got to pay 26% on all crypto. So does your jurisdiction really depend? Is this something that your platform caters to, so you can pick where you are and it will apply the taxes in your place?
Yeah. Cointracking is not tracking your location. So it's not automatically. You can choose the location where you are. But basically from a legal perspective, where your home is, that's where your tax regime is. And if you live in Dubai and, make a living over there, then you are lucky from a tax perspective. If you're in UK, depends how much you earn. But in our tool, you can choose the country, and you can also change the country. You don't need to set up an account with one country and then you are binded to this country. You can change anything you want. But yeah, basically, if you are living in a country and living under a tax regime, then other tax regimes don't apply to you. So you don't have to worry about Italy or Dubai or Germany or US or something if you're a UK resident. Yeah.
Okay, brilliant. So that takes more weight off. So that's fantastic. Because I know I always see different laws changing with tax. It's like this country is charging this much tax now, and this country is regulating crypto in this way. How do you guys keep up with all these changes? Is this something that people need to worry about, that they have maybe missed the boat with certain tax laws, or is this something that you guys cater to?
Yeah, we have a whole, a whole department dedicated to keeping up with, tax laws and the changes in the regulations in different countries, especially in the reports we have or we offer. But as a private citizen, I think you don't have to worry because, first of all, most of the news you get are often speculations, or if the parliament is discussing about it and the news is all over it, or a finance minister is proposing a new regulation, then it's all over the news. But mostly, if it isn't law already, you don't need to worry about that. And secondly, if a law is passed, most of the time it's for the next financial year. So you don't have to worry about it immediately. If you want to keep up, especially in crypto, those informations flow very fast. So you just need to, check your influencers or your news sites, websites, or you can talk to your tax attorney.
Yeah, that is a good point, actually. So there's lots of sources of information. Just always remain vigilant, and if not, hopefully it will just come around the next year and you'll be okay. But as you said, everything's sort of automated on your platform anyway, so that saves a lot of hassle. But speaking of sort of laws and things changing, what are the consequences of not paying your tax? So like, say if someone has been trading crypto for a really long time and they didn't really think it would amount to anything, as I know a lot of people just dabble in it, and then they become quite successful and they find themselves in a bit of trouble where they've made quite a lot of money and they haven't claimed tax on that because laws have only come around currently. What would your advice be to those people who may be thinking, oh God, I actually need to do something about this now?
Yeah. So if you missed a few years, probably the best thing to do is talk to a tax attorney, how to manage that. Basically, I don't know how it is in Britain, but in Germany, you have the case if receive new information and then you can file the new information or the new income to the tax authorities, and then they will, tax it then, and there is not much pressure. But if you did it on purpose, or if you missed it on purpose, depending on the amount you didn't pay, it could be tax fraud, and there could be problems. Penalties, penalty fees, or sometimes you can also go to prison if the amount is too big. But again, I'm not a tax attorney, and most of the time it's a little bit more relaxed. But you should keep track of everything and be ahead of things like that.
So everyone, please just be transparent with your taxes and just hand them in. Just do that, okay? Even if it's been a few years, just speak to your tax attorney. So that's a good way to rectify it. And I know there is a lot of questions about, because I know that you said if you buy crypto that's an initial sale, which doesn't necessarily mean that it's taxed, but I know that crypto cards are becoming a very popular thing. So say if someone bought ETH at 100 and then it multiplied to say 400, and then you start spending that money on a crypto card, what happens then? Does it get taxed from the sale of purchase? Or I know this is a bit of an odd question, but I've been trolling through the internet.
Yeah, it's a very good question, and has a practical issue. Basically, it depends on how the credit card works. If the crypto you have behind the card is as a collateral, and everything you spend on the card gets to be or is reducing your crypto amount, your ETH amount or whatever, or if it's like prepaid and like crypto.com and you have to .com and you have to change to USDC or something and add that to the card. But basically, every purchase with crypto is like a sale of the crypto. So if you buy a car with crypto, the difference between acquisition costs and price of the car is also a taxable gain, crypto gain, and there's no difference if there's a credit card or not. So yeah,
interesting. That is an interesting one, because
again,
I know that.
Yeah.
Sorry, please continue. I cut you off.
But again, it depends a little bit how the credit card works. Yeah. But
yeah. Fantastic, thank you, because I know that a lot of people don't really not know what they're doing with those, but I know it's a very new concept. A lot of new crypto credit cards are coming out, so people are sort of scrambling for, how do I tax this, how do I not? But as you said, a point of sale, that's when it's a taxable amount. And I know obviously there are penalties for not paying your crypto taxes, and you said if someone purposefully doesn't declare it, is there a possibility that authorities can look into your wallet? Because as we know, the blockchain is completely transparent, so everyone can see where money is flowing to, and that's like part of the benefits of Web3, is that people can have a clear view on what is happening. Is that something that is occurring where governments are looking into people's crypto transactions, or is this not really a thing, or is this not really something that you know? I don't know. This is probably a very imposing question.
In the past years, it was a little bit easier for crypto people to not show any taxes, but in the last years or in the past years, we've seen an increase of government interaction. Financial departments are spending more time and more personnel to track crypto. And nowadays it's actually very easy for tax authorities to track crypto, especially if you are on centralized exchanges. With KYC programs, no one is anonymous anymore. And like you said, in a blockchain, everything, not the personal name, but everything else is stored, and they just have to do a blockchain export and track the coins from wallet to wallet to wallet and to some exchange where they have your personal information. So it should be very easy for tax authorities to track you and your crypto actions. So, and it's becoming more easy every day because they have people working on it every day. And maybe the past years were a little bit more easier for the crypto community, but the following years will be, you just need to be transparent in those things, I think.
Agreed. And I feel that people listening now will be thinking, oh goodness, I need to check that wallet I made back in like 2014. Have I taken it out? So people are going to be frantically searching through all of their transactions. But as you said, if it's an honest mistake, if you forget about a wallet and you made a sale back in, say, 2015, 2016, I'm not sure, but then you find it again, say, look, hands up, I completely forgot about this, I want to declare this now.
Okay, if the wallet is still existing and the coin is still, traded at a good value, then congratulations. But
yes, well done. You don't hear much of that anymore.
Yeah, and if you didn't lose the key. So,
oh my goodness.
Yeah. But I think you should talk to a tax attorney in those cases. But basically, there are some some possible options you have. You can file another report and declare it as, I didn't know and I lost it and something like that. Or, there are some other deadlines. When they are passed, then, your tax return is final and there's nothing to do about it. But yeah, basically in those cases, especially if we're talking about a lot of money, you should definitely talk to a consultant about that.
Yeah, for sure. And you said something very interesting for which I didn't think of. What if you do lose the keys? Say if you make 3 million of crypto and you're like, well, that's stuck in that exchange or it's stuck on a memory stick or something. What happens then? Not only is that extremely painful for the person who made the gains, but
yeah, that's a very good question. I would add to that, if you got your key stolen or your coin stolen or something like that, that's bad, because you can't deduct any loss of that against your other profits. Most of the time, the coins are lost, and you, from a tax perspective, there's no way you can use that to decrease some of your other tax expenses or something like that. But again, if you talk to a tax attorney, in some cases it might work. Depends on the case.
Okay. Yeah, it's very dependent, because my goodness, losing that little piece of paper you stuffed away in your sock drawer with your seed phrases on is always a worry. Not that mine's in there. No, don't like that. But but thank you so much for all your advice on tax. And I've learned a lot today. I had really no idea. Like, I knew roughly how to do taxes in fiat currency, but crypto was a little bit of an anomaly for me. But just before we wrap up, is there any final piece of advice you may give someone who is a bit intimidated into getting into crypto and like worrying about their taxes? Like, what would you recommend they do? Like, just remain vigilant, or just to keep everything in one wallet? If that makes sense.
Okay. First of all, you need to breathe, you need to relax. Taxes are not that complicated and hard as people might think. The most important thing is to get an overview about your exchanges and your wallets. And that's, the first step. Get an overview about everything. Second step is to track, your transactions, figure out how many transactions did I do during the last financial year. And if your transaction volume is exceeding a certain amount, I don't know, I think 100 or 200 transactions you are able to track by yourself, by hand. But if it's exceeding, that number, you should consider using a tracking tool, or using a tax consultant who's a professional and should know how to do it, especially if he's a crypto consultant. And then, file your tax report. After you tracked your transactions, most of the time you could, map them to your different tax rates or tax regimes, capital gains or income, and then you file your tax return.
Okay.
A positive thing to know is maybe in Britain you have 2 free allowances, one for capital gains and one for your income, which is approximately £12,000. So for capital gains it's 12,300 or something, and for the other income it's 12,500 plus X. So you can use those free allowances if you want to, reduce your tax burden. But you need to be smart about that. Yeah.
Completely. No, but thank you so much. I feel that take a deep breath, just relax is the best place to start with that. And Thank you so much for coming onto the pod today, and thank you everyone for tuning in. We hope that you found this helpful and you've heard it from the professionals. Thank you so much, Mo. And make sure to check out Cointracking's website. You can have a look on everybithelps.io and you can find links there and exclusive discounts.